Hey guys, it's Tuesday and it's Red Room time. Once again, I'm here with Luke. We got a guest, Kyle, who works for Venture REI. But what's the management company exactly?
Yeah, just Venture REI Property Management.
There you go, Venture REI. Nice. That's simple. And today we're talking about short-term rentals. If you've been watching the news, at least the headlines about short-term rentals, they named a couple cities, obviously Phoenix being one of them, and I think the number was down 47% in revenue, right? So
was that year over year? Was that from last year?
Yeah, I think that's year over year.
Okay.
Now the big question is, was the previous years more inflated because people weren't traveling as much, and people were coming to Phoenix, because of the pandemic and all the other stuff that goes with that, or so just like a lot of the conversation we've had on the Red Room is like, is the market really down, or was the market just super inflated because there was 3% interest rates, right? So some of that can play into it. So maybe the short-term rental market was just overinflated because you had so many people coming to Arizona because so many other places were closed. The borders were closed. Hawaii was closed. A lot of things were closed. So maybe the short-term rental market was overinflated, not really that it's down 47%. But I figured I reached out to Dan Noma, who's with Venture REI, a friend of mine that I've known for a while. All he really had to do was complain about Grand Canyon University stealing ASU basketball players. But we did get some insight, and he brought Kyle on to give us some numbers. So Kyle manages 55 properties.
Yep.
So a little bit bigger sample size than, I only have 3 here in Phoenix. Luke has 10 total, but 7 of those are in northern Arizona. So Kyle has more of it, and I have more luxury. Luke has northern Arizona. So what's nice, Kyle has a nice mix. He only has a few luxury, but most of them, and he's got some short term. He's got some 30-year or 30-day rentals, midterm rentals. So he's got a better sample size than what.
Heck yeah!
So
I love it. I'm excited. I'm excited to hear from you, Kyle.
So Kyle, let's dig into it. And we talked yesterday. So kind of what I was interested to find out is that after Super Bowl, a lot of the short-term rentals went to midterm rentals that you said yesterday, which kind of actually, I actually do short-term, and then like May, June, I switched to like a 4-month rental for people that are rehabbing a house or anything like that, because I don't really want to deal with it during the summer. And you said there was just a influx of that, just like 5,000 or something that moved to that.
Oh, jeez.
Yeah, we saw, with the Super Bowl and everything, we saw a ton of investors last year waiting to capitalize on, the Waste Management Open and then, Super Bowl. And so we were up to, in the whole valley, there was around 22,000 vacation rentals. And then Super Bowl comes and only 51% get booked. And so if you were an investor and you put all this time and money into these properties and you didn't get booked, you were you were sitting there like, this was an awful investment, like here. And so where I thought, that was the red flag where a lot of these investors were going to sell, they waited through spring training and through March. And then in April, we started to see the numbers go down, but not a lot of them being put up for sale. So we had to figure out where these rentals were going. And so there was a lot of traffic that went to like furnishfinder.com, which caters to traveling nurses.
Yeah.
And they saw about a 5,000 property increase between May and June.
Wow.
And so a lot of people thought, well, I'm just going to get a 3-month to 6-month tenant in here. But what they didn't realize was that places like the Mayo Clinic and other hospitals stopped their contracts with traveling nurses. And so a lot of these properties have these 30-night minimum restrictions, which is good for people who are sitting and waiting in the short-term space, But what I think is going to happen is a lot of these, once we get through summer, they didn't have too many bookings. A lot of them are going to convert to a traditional long-term rental.
Yep.
So the goal that I'm thinking is going to happen is by the end of the year, we'll be back to kind of those pre-pandemic levels with inventory, and we'll be back to normal for next year.
Right. So it's interesting because Chris and I had talked about it, when it was kind of happening last year, with the interest rates being as low as they were. If you were just taking a look at what was for sale or what was, on the market on Airbnb in South Scottsdale, it was absurd. You felt like it was like every third house was like an Airbnb or some type of a short-term rental. And we were just saying, we're like, there's no way this can stay. There's not a chance that this can maintain, and with these being successful. And so, I mean, obviously you saw the exact same thing happen with after that all ended. It all just kind of fell apart. It's wild.
Yeah. So some of the stats I saw, like 51% of people didn't get booked. So everybody that like played into like, hey, I'm going to go make a bunch of money
just for the Super Bowl,
for the Super Bowl, didn't get booked. Now, do you have any numbers on how much inventory short-term rental had pre-pandemic? Any idea what that number looks like?
Yeah, we were closer to the 12 to 13,000 mark in the whole valley.
Okay.
I like to look at it as the whole valley rather than just specific cities like Scottsdale and Phoenix, just because, there's so many options that people are willing to drive or Uber, so yeah, it was around that 12 to 13,000 mark. And that's really where everybody's profiting, where everybody's doing well if you're following the right steps with your rates and guest reviews and all that. So, I think that there will be sales coming out of summer, but I think people are going to just go to that traditional, especially if they got the interest rates low, last year. Why wouldn't you just turn it into a long-term rental?
Yeah, for sure. Where exactly, like you said, now when you're trying to buy something that's got a 7% interest rate, it doesn't exactly make sense to go long term. You're gonna be losing money.
Right.
So I totally get that.
Yeah. So 12 to 13,000 is pre-pandemic. Another stat, we were actually on the Red Room last October. We were talking that it went up like 50% year over year. From last October, and your email, it said it reached actually a high of 60% year over year at one point for Phoenix in new inventory. So that would probably be that 12,000 to 22,000 number that you probably just talked about. So, I did read a number, and maybe it was just on your email, that we're back down to someone. Or because I've been doing research, so I asked like 3 or 4 people. So is the inventory back down around 17,000? Is that kind of the number that we're seeing on the inventory?
Yeah. So overall, we're seeing around that 17,000 number right now, which is helping with summer rates and occupancy wise. But in the summer in Phoenix, it really dead anyways. But I think it's heading the right direction, right? For people who understand this industry need to play the long game. And this was just a 1-year hiccup or a 6-month hiccup in that long-term goal. So 17,000 is where it's at now, and we'll just have to see in about, I would say probably the next 60 days we'll know where it's going to be for Q4.
Right. Now, Kyle, are you seeing a huge difference in the summertime in Phoenix for properties that have a pool versus ones that don't?
Oh yeah, absolutely. I mean, that's even during the winters, people want a heated pool. It's a huge draw to have. I mean, when you're looking at amenities for people booking between properties A and B, a pool is going to determine that factor. And people don't mind paying the extra, $75, $80 more per night to have that amenity. It's
to have a heated pool too, I'm sure.
Exactly. And, with the new Scottsdale regulations and a lot of surrounding cities following suit for like pool fences and making sure that, that those areas are secure, it's really helping with, guest understanding that they're going to be safe around pools.
Yeah. Right. Makes sense.
So let's dig in a little bit with, we talked a little bit about the Scottsdale ordinances that they threw up. Obviously, you got to have a license. You have to notify your immediate. It's just your
Neighbors.
immediate, right? Your immediate neighbor
Yeah.
that it's a short.
Across the street, and then to the neighbors to the side of your place.
Yeah.
They don't have to sign off on anything, right?
No, you just send a
Okay.
letter. No, yeah.
Can you post it on their door? Is it got to be certified letter?
So it's really generic how they have it, but we're just sending letters, or you can drop them off in their mailbox. Just showing that you have delivered it to them.
Right, right. That's awesome.
And then so they had to put you got to hang your license also, and then you had to put up the pool fence, right? So that you had to put the fence around the pool, similar to what the hotels have, right? So we're not.
Yeah, it has to be, I think, 5 feet, and then it has to have a self-latching gate so that nobody can accidentally go in there. And then if there's any exit points, so a lot of people in Scottsdale have from their garage, they have a door that goes into the backyard. And so they thought just putting the fence in front of the patio would be okay, but in reality, you have to have it around the water. So
right. Interesting.
Is there a certain distance from the water to where the fence needs to be, or as long as
I'd have to look it up. I think it's 4 to 6 feet, somewhere in that range. Yeah, there's a lot of stipulations with the fence. I think it has to be 5 feet. But we work with a couple different vendors that, when they put in this ordinance, that's what they pretty much had a pricing package ready to go so that we could pass it on to owners and they could just.
Right. Cool. Now, Kyle, I got a question. How have you seen, obviously with this drop that everyone's saying, the 51% drop, how have you seen the year over year for your properties that you manage, the 55?
Yeah, it's been interesting. We're here at Venture REI, we invest in different softwares and different rate management tools, and that's really the key that's helped us be better than the market. The rates during the summer are always down. And so really, if you're not going to add any more amenities or, add 2 or 3 bedrooms to the house, you've got to drop your price. And so it's been a lot of communication with the owners and saying, hey, listen, like we can set this base rate at, $200 a night, but you might only get booked 1 weekend this month. But our revenue showing us if we drop it to 150, that you'll be booked 3 out of the 4 weekends. And so
right.
fine line to balance, and but we've got a lot of great owners that are willing to listen to our suggestions and work with us to get occupancy.
And then what do you guys charge for your percent?
Yeah, so we're it depends on the property, but we're in the 20 to 25% range.
Cool. And you guys, I'm sure, obviously you've got cleaners on, I don't know if it's on staff or if you just have them on call.
Yeah, we have a cleaning company we work with in Well and Good, and so they facilitate all the cleanings. They're linked up with our PMS system. So, and then we have in-house maintenance that handles any issues in the homes, and so that was a big piece with making sure that we can lower our costs on that piece. So.
Right. I mean, I don't think most people don't really understand what all goes into these Airbnbs. It's like, we had a booking last night where, and this hadn't happened. We've had this one Airbnb for 4 years, and we had a guest go to check in. They checked in late at night. They're checking in at 9:00, and for some odd reason, the keypad wasn't working. And they couldn't get in at 9:00. And so we had to send them to a hotel. And I mean, they tried absolutely everything. And it's one of those things that's, the more that you do it, and especially this is it's more in the outskirts of town. It's way out in the Pines up in Prescott. And so, I mean, it's not like it's just some easy, we'll have someone drive up there real quick. So yeah, it's like, it's crazy how the more that you have and the longer that you're doing this, the more that you learn. And so I'm switching to all keypads, that where they have the touch keypads, but then I'm going to have a key on site hidden on every single property as well. It's like, it's crazy the things that you learn on just different, and again, this has been 4 years that we've never had an issue like this. It's crazy.
Oh yeah. There's a ton of instances like that where, it's something random, like, the house shorts out and you can't figure out where the guest can't figure out where the, switcher box is. And so, it's little things like that you just have to learn through.
For sure. For sure. We had another one. This was like a month ago. We had a bird was up in the attic, and they just heard it all night, just flapping around up there, and it was trying to get out and it couldn't get out. And so, oh yeah, we got complaints on that. It's crazy how the different things that pop up.
So, what I like about what we talked about yesterday was like that you guys are kind of ahead of the curve on your pricing. You're watching 60 days out, 45 days out. Just, I mean, it didn't sound like in our conversation yesterday, you kind of wait till 60 days out, but then you really start watching pricing, and I'm sure you have don't know what software you said you use for pricing, but you have a statewide software, right? You can see all the different, whereas I just use AirDNA because my properties are in like a little 2-mile radius. So I just have to buy their one zip code, and I can see the pricing that I need to see for my properties. But your occupancy was like at 92%, I think you said, right?
Yeah, for the Super Bowl. Yeah.
For the Super Bowl.
Oh, okay.
So the national average the statewide average was 51, but they were out there actively dropping prices because, kind of the writing was on the wall with inventory.
Yep.
And they were able to keep a 92% occupancy rate versus, the rest of us that had the 51% occupancy rate. I had both mine full. It was just, I got one at a really good price. And then I had someone cancel because I had them locked in at a really good price, but then obviously they saw the inventory pricing dropping, and it was cheaper for them to cancel and go to another property. So unfortunately that happened to me. And then I had to take the $1,000 a night versus on my one property, I got closer to $5,000 a night.
Jeez.
So.
Well, yeah, we heard that happen a lot. So with new owners that we signed on after the Super Bowl, that's one of the things we talked about was how'd you perform during Super Bowl? And, they said they had a booking for 6 months, and then a week before they got canceled on, and they lost out on that revenue. And the reason that we were able is for that weekend, we set up our super strict 30 cancellation. So nobody could cancel unless they wanted to lose all the revenue. And it's little things like that you just got to be on top of. Like for high occupancy weekends, like people need to understand there's going to be a cancellation policy in effect that you have to stay here. So it helped. But yeah, like you said, we were watching the Super Bowl like 4 weeks ahead of time. And, we started to see more and more inventory on Airbnb come up. And it was like, we were going to wait till after the championship game. So that way the teams, once you knew they were coming to the Super Bowl, you'd travel. But 2 weeks before that, we're like, no, the inventories just keeps climbing. And it was a lot of people who were going to go out of town for the week and list their home for $20,000, So that's how we were able to capture it and then lock them in. So
I think so many people heard the stories from the Super Bowl. What was that, like 7 years ago or whatever it was, where that's what everyone was doing. Exactly like you're saying. They're like, oh, I'm gonna I'll go on a week vacation and I'll spend $5,000, but I'll make $7,000 on my house. So it'll cover the entire trip. So yeah, I totally get that. It's funny.
So obviously, I mean, have you? I would love to know this answer just for my own purposes. Do you think there's out of your 20-25% management fee? I mean, I wonder is there any kind of numbers you would say that you've talked to sellers and they're like, okay, I'm paying you 20 or 25%, but you're keeping me booked, 20% more. You got any kind of numbers like that? Because I have my daughter who's my personal assistant manage it. So we stay on top of it. We respond, we're super hosts, all the stuff that goes along with that. But like, if you're just kind of doing it as a side gig, very, very difficult.
Yeah. It's tough to answer that specific question because we get a lot of owners that come from managing it themselves or from a different property management company. And, it's difficult to determine like those specific numbers. Like, but what I can say is like, we're investing in like beyond pricing software. So that way we know that your property is being priced appropriately twice a day. Where somebody who's just a mom and pop's going to set a base rate for $200 during the week and $250 on the weekends. We're setting it at $245 on the weekends so that we can capture that guest. So it's not so much like in comparison to others. It's the physical asset itself is really what's going to determine what people are going to book. But yeah, it's just keeping those amenities that we can offer as a property management company. And, that it is a little bit of a higher fee, but we offer a lot more softwares and guest interaction and all of that stuff.
Nice. And I was curious because I don't do this. I just let people book. And this is a good question for you too. But when I travel on short-term rentals, I get that not a third party, but a rental agreement on the side. You get it emailed to you on the side. Here's your rental agreement, not just the Airbnb rental agreement. Now, do you send out those as well?
Yeah, we do. It's an extra layer of protection for the owner and for ourselves that, scam bookings and credit cards and all that. We really don't have that because people are having to put their more personal information in there, and it really just helps with all those scams.
Luke, do you do that as well? Do you do a side lease agreement?
Chris, you got to tell your son to stop calling me. I'm not too sure because all of our bookings go through Airbnb right now. And so, like I said, Sage handles all of the back end stuff. And so I'm not sure if we do that or not. I know obviously you're protected to a certain extent, a certain layer through Airbnb. Obviously, we've had the times come up where someone will say, hey, you know what? I just stayed these 3 nights and I see that it's available the next 2 nights. Can I just buy, pay for these 2 nights on the side so I don't have to pay the Airbnb fees? And we learned early on that's a really bad idea. Do not do that. Just because there's no protection. Like you said, Airbnb is not going to protect you once they book it, on the side of them. And so again, it's like, they might Zelle you or Venmo you $500 for 2 nights or whatever it might be. But if anything happens, it's like, well, sorry, I don't know what to tell you. So that's what makes it tough.
What specifically is kind of in that agreement that helps the owner more than just like your Airbnb, click the box here?
Yeah, so all of our owners have a $500,000 insurance policy. That's also one of the new rules with the Scottsdale licensing is that every property has to have the renter's insurance liability. And so pretty much explains that it's a damage waiver, explains that if anything's damaged, guest is responsible, and then it does ask for ID verification. So we get a picture of their license.
Right.
And so, so it covers that aspect of, the owners feeling more comfortable of who's in their property because we have a photo ID of them and they're signing essentially all of our guest rules.
Gotcha. Cool. So what else can you tell us? The 1 and 2 person that's managing themselves, some pitfalls that they can avoid to help them in the short-term rental game in the future. Obviously there's going to be some that just get out of the game. And then the big question is them getting out of the game, but there's still all the gurus selling the courses on short-term rental. And of course the gurus aren't saying, hey, you probably shouldn't buy right now.
Yeah, right.
They're still just selling them the dream that this is, hey, you make 3 times as much as you do in long-term rentals, which probably isn't the case right now.
Yeah, the biggest thing is the asset itself. If somebody's struggling right now and they don't have any sentimental ties to the property, looking at using other things like a 1031 exchange to get into a different property or into a different city. Scottsdale is always going to be a great area that attracts a ton of guests, bachelorette parties, all of that. But when we're looking at the data right now, Mesa is really the up and coming market. Currently, there's about 1,500 rentals in there. And what AirDNA is showing us, it can support up to about 3,000. And so if you can find the right asset with a pool and good amenities close to downtown, that's really where you should be looking at. But there's people who have sentimental ties to their property and they want to keep that property their first home. And I would just say, really look at the amenities that you offer. It's difficult right now to add a pool. I think it's about a 2 to 3 year window to get a pool installed. We have one property that an owner was recently trying to add one, and it's going to be 2 years till they start seeing that additional revenue.
2 years to add a pool?
Yeah, a lot of pool builders are tied up with like new build construction, and a lot of it was materials as well. It's been one of the slower industries to get back with supplies.
Wow. Kyle, question, what are your thoughts on Chandler Gilbert?
So we got to split them up because Chandler has a ton of HOAs, and a lot of those HOAs are 30-night mins. I think with Intel being over there, it is a good opportunity to look at for a smaller 2 to 3 bedroom.
Perfect. So I like to hear.
And then in Gilbert's interesting. It's a lot of families that travel in there that are going to visit other families.
Yeah.
So, they have, I think, about 900 units was the last time I looked. And but it does have a lower occupancy.
I mean, so we've got one that's right downtown Gilbert. It's probably one of the 5 closest houses to the strip there. It does very well, but like we've talked about it, and I think one of the problems with Gilbert with Airbnb right now is that there's just not a lot of attraction besides downtown. You know what I mean? There's not any baseball fields like Mesa has. I mean, I'm sure Mesa absolutely crushes it in spring training time if you're around the Cubs stadium there, where Gilbert doesn't have that. They don't have some of those kind of the bigger things. Any type of whether it's a baseball stadium or amphitheaters where they're having concerts and stuff like that. So I think that's probably what hurts them a bit, I would say. I mean, would you agree with that?
Yeah, it's very event based. There's a lot of kids soccer tournaments or softball tournaments down there, and you see a lot of like teams booking or families booking. But yeah, I agree. It's definitely tougher to get just somebody coming into town for the weekend to party or whatever.
Yeah, no, for sure. And then the reason I say I'm excited about what you said about Chandler. We're launching a couple of them in Chandler here very soon. So, and they're both smaller, exactly like you said too.
Well, the tip before you got on, Luke, is obviously downtown Mesa is trying to duplicate what downtown Chandler and downtown Gilbert have done, and if you just heard that they can support about another 1,500. So like if you have a condo that's maybe in an HOA that's got a 30-day minimum or something like that, a lot of the good thing about old downtown Mesa is it's older product. It's not going to have an HOA.
Correct. Yeah.
So that would be Kyle's new hotspot to buy. That's what I deciphered from the conversation.
We're starting to underwrite a lot more properties in Mesa, and Mesa is a very large, like surface area wise, you can get pretty far away. You can get like 20 miles away from downtown, but it's been a lot of good. There's still a lot of good assets that are going to perform well in there, and especially downtown with them remodeling just everything.
Like you said, Mesa is just a huge city in general. I mean, it's insane. If you look at it, geographically, it's very large.
But what's great about it is on the north side of it, you got a freeway running the whole section.
Right? I know, and on the south side too.
Yeah, on the south side too, really. So cool. Well, we only jump on here for 30 minutes, Kyle. If anybody has any questions, please jump on and ask. But we do appreciate you jumping on with us and sharing all the info.
Absolutely.
Not the hey, Phoenix is down 47.6%. In your email, you were saying that I want to say your occupancy nights were up one night, right? Year over year?
Yeah. So the ADR, so the average daily rate is down. It's down about 14%, but the occupancy is up, I think 1% year over year. So, even with the influx of inventory, you're still seeing that people are still traveling here and the demand's there. It's just that with so much inventory, there's
competition.
Yeah. So across his portfolio, he just, he gave us his numbers, but across his 55 houses, he's down 14%, not 47.6%.
Right.
Yeah.
But, he's out there, obviously, he's got the pricing software, he's got all the tools. How many platforms? I mean, I just use VRBO and Airbnb. I use the two platforms. How many platforms are your properties generally on?
Yeah. So normally we are on Airbnb, VRBO, and then we tried booking.com. Booking.com is, I think, good if you can be on their payment processor.
Right.
We couldn't be. It was just didn't integrate with our system well. So, but yeah, we have a direct booking website, and then but I mean, 85% of our business comes from Airbnb, 10% comes from VRBO, and 5% is direct book. So yeah.
Cool.
Well, cool. Thanks, Kyle, for jumping on.
Appreciate it.
Straighten out what's really happening.
Yeah,
and
absolutely.
you can reach out. What's the best way to reach you, Kyle?
It's just Kyle@venturerei.com.
There you go, Kyle at Venture. So if you have a short-term rental, you're weighing the thoughts of your management or Kyle being your manager. Sounds like Kyle's got a lot of tools that he can help you with.
Absolutely.
Yeah, and if
Thanks, Kyle. We appreciate it.
Yeah. All right. Thanks, guys.
Yep.
We'll see you.